I'd like to introduce Michael and Mark from iSelect. Gentlemen, can you hear me okay?
Absolutely.
Now, Michael and Mark, you are from iSelect, and I don't think it's unfair to say that you're one of the most interesting kind of agtech-focused investors, VCs in the space. And I thought it would be a fantastic opportunity to talk to you both just about what's going on in the agtech world at the moment. So let's sort of trace our steps back. Tell me a little bit about iSelect. Tell me what it is you do, and then we'll talk a bit about why agtech is such an interesting area at the moment. Who wants to kick off? Give me a pen portrait of iSelect.
Yeah, Mike.
Sure, I can start us here, David. First of all, thanks for your time today. We really appreciate you including us
Pleasure.
on this interview. This is a great opportunity for us to talk about agtech, which we're very excited about these days.
Yeah.
iSelect started in St. Louis, Missouri, and we from the very start were an agtech investor. We were fortunate in St. Louis to be at the heart of a lot of the early innovation in agricultural technologies. We have the Danforth Plant Life Science Center located in suburban St. Louis, and we have a lot of expertise that's been brought to our community. And then, we're in the heart of the farmland, too. We're in the heart of the farming area of the United States. So it made sense for us from the start to be involved in ag tech. And we started investing, 7-8 years ago in very small amounts, very early stage companies that were really in the R&D phase of their technology development. We were doing Series Seed stage investment, even pre-seed in some cases, very, very early. What has happened is over the last 7 or 8 years, we have grown up with the industry, and we've seen some of the original portfolio companies that we invested in mature to the point where they've gone public. They're at their later stages of financing now. They've really matured to the point where they're out of the R&D phase and they're commercializing their technology. And we've seen the broader industry around us grow. And we've seen over the course of the past year to 18 months, a real attention and focus on this area that we didn't see when we started here. And it's been driven by geopolitical forces and climate forces that are impacting agriculture on a global basis right now. So we've been fortunate to have a seat at this table for about as long as anybody who's been investing in this area has.
And just a couple of basics. I mean, how much money roughly do you manage? And presumably you're mostly American and mostly, actually, where would your portfolio be? Mostly late stage, mid stage, early stage? What are some portfolio characteristics?
Mark, do you want to answer that?
Well, so between our AUM and distributions, we're about a couple $100 million right now in allocations that we've invested in. We are primarily America. We will invest global. We invest throughout the country. Originally, it was almost solely focused on the Midwest United States, but we are now investing on the coasts as well as other areas of the country as well. Have a few other companies in Europe and Israel, Australia, and are not averse to investing in those other areas. We do need to have operating entities of those companies in the United States as well from a due diligence and an oversight standpoint. But we will look globally, but most of it is in North America and particularly the United States.
What stage are you tending to invest in more focus on now? Late stage, early stage, mid stage?
We started investing at the earliest stages, seed and Series A, but we in the United States, we run an open-ended fund. And so we go through the capital stack with the companies. And initially, it was primarily early stage. As the companies have matured, our opportunity to write larger checks in later stage rounds has gone up. And so just from a volume standpoint, number of portfolio companies is pretty evenly split. But from a dollars of investment standpoint, it's more heavily weighted towards the mid to later stage deals now.
Yeah, which makes sense if you're following it for the life cycle. Okay, so let's kick off with the subject at hand, agtech. Now, again, let's back up again. There's been a lot of publicity, a lot of media coverage around the whole kind of food tech space, particularly kind of alternative proteins. Everybody knows their stories about what's been happening with Beyond Meat and that kind of stuff. But that, in a sense, in the food tech spectrum or the technology and food sector, that's really only, I think, the more a kind of early stage, less interesting story, because I think there's a lot more interesting stuff happening in ag tech. So let's define what we mean by ag tech. Is it just basically giving robots to farmers?
Well, that's one part of it. But it's a lot broader than that too. And really what has happened in agriculture is about 10 years ago, the cost of some of the enabling technologies, the ability to sequence genes, the ability to store data, use data, accumulate a lot of data, started it's been declining in price and cost, and it's reached a point where it can be applied in agriculture. And agriculture is one of the least digitized, probably the least digitized industry in the world. And it's also the world's largest industry too.
All right. Okay.
And so there's an immense amount of opportunity in there. So yes, there is a labor problem on farms, and every farmer and every globally is suffering from the shortage of labor there. So there is a market and there is an opportunity in robots on farms, and we agree with that. We're investing there. But there's also opportunities in replacing nitrogen fertilizer usage. There's one of the secrets is that herbicides and pesticides are losing their efficacy. Bugs and weeds are evolving resistance to that. Yeah. In addition to all of the sustainable, environmentally sound reasons to switching to biologics, there's a real efficacy need there too. So in the biologics to replace herbicides and pesticides, there's an opportunity. We're having water shortages on a global basis right now. Everybody suffered drought this year, or they had too much water. Yeah. We need to breed new plants that can grow and adapt, that are adapted to grow in those environments. And so genetic technology and plant breeding is another area of focus. And you can go across the industry, and there's opportunities to apply this new technology base in agriculture across the whole industry, and it's systemic, the opportunity that we're looking at, and to really affect the change that we need to from both a sustainability and a food production standpoint. We have to hit each one of those categories, and so we see it as a much broader investment opportunity.
And just to frame the size of the opportunity, in just that one vertical that Mike talked about in terms of biologicals, which is the input side of agriculture. So not only the pesticides and herbicides, but the fertilizers, fungicides, et cetera. That is a $300 billion global industry. And to put that into perspective, the global smartphone market is about $470 billion. So not that much smaller than what everybody knows is that when they're their global smartphone market. And that's just one area that we invest in. And so the size of the opportunity is immense. Obviously, there's regulatory tailwinds in that area as well too, and then what Mike alluded to as well too, the precision agriculture, taking these technologies and be able to farm in a more precise manner, using less resources and eventually less cost for higher margins for farmers is an immense opportunity for the growers and for the world really.
Okay, so let's spin through. I want to identify kind of 4 or 5 areas. So we've already identified biologics. We'll come back to that in next. Robotics, we've also talked a bit about. Plant biotech, but I suppose it's probably a bit broader than that. But if we use a simple term, plant biotech, as a catch-all, I want to talk also a bit about big data and how farmers are increasingly becoming masters of their data as well as masters of their land and their animals. And then I want to just finish off on sort of some more nascent areas. I just want your view on things like vertical farming or carbon markets and carbon credits. So let's just spool through those each in turn, a couple of minutes in each. So we talked a bit about biologics. So the classic debate has always been, people have been slightly worried, they've got the big companies have got a bit of big GMO for, the herbicides and that kind of stuff. So there's been that debate. There's also been, as you said, there's a separate debate around all the synthetics that are used for fertilizer, the nitrogen fixing process, which everybody is sort of all waking up to now as has got its limitations in terms of pollution of water systems in particular. What's the most interesting bit of that biologic space at the moment? What do you think we're going to see directly in the market in the next 3 to 4 or 5 years? Where's the real opportunity set?
You've identified it, David. It's in the nitrogen fixation area here. Yeah. The global, we talked about global events when we started. One thing that happened with the war in Ukraine, that Russia produces a giant amount of the world's fertilizer too, and then natural gas, the Haber-Bosch process that's used to produce synthetic nitrogen fertilizer, is dependent on natural gas, and so the combination of those two factors the price of natural gas going up, and then the limitations on the market for fertilizer caused by the Russian war with Ukraine really made a lot of these technologies that were already close to price parity with traditional fertilizer cheaper and more available to the market because they're at a lower price point here. And when we look at these technologies, we look for three things. We look for, is there a sustainable impact to this? Does it improve that component of farming? Does it have an agronomic impact on the plant? Does it really help the farmer there? And then does it improve farmer profitability? Because if you can't check that final box on things, then you don't have widespread adoption, and you don't really reach the scalability you need for the markets that you're going after too. And you don't have that additionality that they're looking for from an ESG standpoint too. So we're seeing that with global events and what's happening in the fertilizer markets, the technologies that can fix the biologics that can improve the natural process of taking nitrogen out of the environment and having the plants absorb that are accelerating very quickly right now. We think there's a giant opportunity there.
And what kind of things are you seeing? I mean, what do these biologics look like?
Well, we have a portfolio company. This has been publicly announced, Kula Bio, that has a great technology that it has a double impact. It's a biological. It's a microbe that pulls carbon dioxide out of the atmosphere. That makes the microbe stronger. Then it fixes nitrogen on the plant, and when the microbe dies, it leaves the carbon in the soil. So you're getting a double whammy impact there. You're reducing the nitrogen that's being used in farming, the runoff, the contribution to nitrous contribution to greenhouse gas emissions, and you're also sequestering carbon in the process. And so those technologies exist. They're being developed right now, and they're reaching a point where they can really compete with traditional products here. And we think there's a giant future for them. So
the thing holding back that space for many years were two things: cost and efficacy. So now they're showing the efficacy via the trials and actually commercial sales, and the cost, even before this recent spike due to geopolitical events, was coming down dramatically and was actually at parity with, in this particular case, most chemical fertilizers. And is now below that level. So if you have those two aspects, and that slice of that inputs market is 100 billion out of that 300 billion, that's about 100 billion. That is an enormous market opportunity to be able to sell into over the next decade or so, with enormous positive impacts on the environment and in the soil as well. And we're seeing, there are cases around the world where regulatory authorities are certainly encouraging farmers, and in some cases mandating that they move away from these chemicals.
The Netherlands, for instance, the Netherlands is a perfect case in point. Massive crisis over the whole subject.
Yes. So lots of opportunities. There are numerous companies. There's not going to be just one winner. We think we've got a very good company that and they're doing very well right now, and there's certainly others in an extremely exciting space.
Well, the reason I'm very enthusiastic about the space is that I had a smile on my face when I saw, I think it was Syngenta proudly announced that it was the third biggest player in biologics. And I could imagine, because it's bought a big biologics company, and I can imagine lots of people went, "What? As in Syngenta?" Not exactly most people's idea of a kind of cuddly-feely, biologics company, but that tells you that there's a market there. Okay, so robotics. So again, talking about big companies getting involved in there. John Deere said recently that they intend to have their first fully automated tractors and machines ready, production line of products ready by about 2030. Now, I can't imagine every farmer I know buying a series of an integrated robotics technology. If nothing else, they always complain about how much they have to spend on their existing tractors. But is the robotics opportunity more than just, robotic strawberry pickers? I can see that. Can't get our hands on enough labour for, specialist fruits and that kind of stuff. So I can sort of see that market. What's your take on farm robotics? Is it going to come out of the niches into the mainstream?
We see that there are two things driving the need for more robotics on the farm. There's the labor shortage and the cost of labor that is just a global phenomenon right now in agriculture. And so that's going to force change in the way that we do farming. The second thing is the environmental impact of the big tractors that we're putting through the fields right now. It's compacting soil, it's hurting soil health, and farmers are starting to understand, particularly the landowners that lease to the farmers are starting to understand the impact of our practices are having on the value of their assets. And so we see a trend towards, soil improvement as part of the land management process too. But we think that there are certain key functions that there's planting, there's spraying, and then there's picking, and you're going to need different types of systems for some of those different functions. And so we think there's opportunities in all of those areas to develop products that would work. And we envision the products largely being smaller scale types of tractors, smaller scale robotics, except in the picking function. Sometimes that may require a larger thing. To address your point on cost, we also think that the business models around farm hardware are going to change some here too, because when you're talking about a fleet of small robots that can run continuously in a farm, it opens up the business model of a leasing or a use-based fee rather than having to have the CapEx to acquire the equipment for the farmer.
But that's not new though, if you think about it, because all the farmers I know, most of them hire in their combine harvesters, from mates. So one local farmer will have basically spent the enormous amount of money to buy a combine harvester, and then they'll kind of bring it in just to do the work. So that model is already sort of out there, isn't it?
It is, and we're going to think it's going to expand more because the robots that can run on a 24/7 basis are even better for that model too. So we think that that's going to be one of the things you see helping distribute that equipment more rapidly, so the farmers don't have that big capital outlay to acquire.
The irony is we could go back to the agricultural gangs, but the gangs are composed of robots. So moving around the countryside itinerantly, helping out with farms. I mean, deadly seriously, that probably is a model.
Yeah, no, you're absolutely right.
Yeah.
The other, go ahead, sir.
No, sorry, you go ahead. Mark.
The other corollary to that is adding more technology to the tractor themselves.
Yeah. Okay.
So additional sensors on the tractors to help map a field. We have companies that are doing that. Additional sensors to help variable spraying, depending on where you are in the field and what the other data is telling you about that particular area, which clearly reduces costs, reduces inputs, is more efficient, et cetera. So lots of technology, smaller companies that can add to the tractor, to the center pivots, to various other existing farm equipment to help make them smarter.
David, going back to our
Going
back to our discussion about nitrogen too, this is an example of how these things are interrelated, and these technology developments are all interrelated too. If you have a tractor, a sprayer where you can use data and information to know where in your field you actually need to apply fertilizer, and then your tractor has the ability of interpreting that data and putting the fertilizer down only in those places, that's another way for us to reduce nitrogen usage too.
Yeah, absolutely. The only thing we've got to make sure is none of this equipment gets nicked by rural thieves, because that's a big issue in the UK. Stealing GPS and tractors is a big issue. Well, you've just actually, Michael, you've just cued the next thing, which is big data. Now, all the farmers I know in my family are barely able to operate their iPhones. They're not exactly, most of the farmers I know, maybe it's a British thing, don't tend to be as technologically switched on as I think they are. But there is a big data revolution coming their way, isn't there? Because actually, if we're talking about the robotics, we're talking about new technologies, we're talking about, we'll come on to this later, about capturing carbon dioxide in the soil. They are going to have to understand their soil and their production systems in much greater detail. And there's a big data revolution coming. And again, the big guys are all over it. I think Microsoft have got quite a big big data business. What's coming in big data and farmers?
So, I grew up on a farm, and a lot of my family and friends are still farmers. And a few years ago, one of my friends that runs a cotton farm in Louisiana in the United States told me that he has so much data and he doesn't have any clue of what to do with it all. And he's getting more data than he could possibly imagine using on his farm, because there's a sensor for everything these days, you know? And I mean, there's soil sensors, there's drones, there's on tractor sensors. You can get weather data delivered to you in ways that you used to not be able to. And there's a real opportunity for someone to integrate all of those systems in a way that gives meaningful agronomic recommendations to the farmer on one hand. And another thing that we think is going to help develop this is the CPGs, the consumer packaged goods, need to know that the products that they're purchasing were produced in certain ways too. So they have an economic interest in that data too. So you have more than one party in the farming world that's interested in that data that gives it value. So you can see when you start to have actionable data that has multiple value lines to it, there's a real opportunity around that. And that's what we see developing on the farms. There's a lot of people out there that are developing sensor programs right now, and the farmers don't know what to do with all that information. And the people that can take that, integrate it into a usable system and provide real recommendations to the farmers, and then other information through the value chain to understand how the products were grown is going to really make a lot of money. Mark, do you have anything to add?
Well, I would just add, a company like Arable, which deploys a sensor in the field in 15 minutes or something like that, and has a very user-friendly interface on your mobile, is where it's going. I don't think it's lost on the technology providers that you have to make this simple and easy to work with the farmer. And so on the one hand, if you can set up a very easy sensor that collects multiple data, and maybe not even only proprietary data, but external data as well, and then make that interface easy for the grower, then I think you're gonna be successful. And we're seeing that now happen, and those companies are growing significantly, and they're gaining big partnerships with big companies who see that traction as well. So it's proliferating.
And David, just to illustrate this point in a kind of tangible way, a lot of people don't realize this, but one of the co-investors that we invest with in AgTech is Google Ventures.
Yeah, absolutely. Yeah, completely. Okay. Now, just moving on to plant biotech, which I'm sure is probably not the term that we should use, but it's just a useful term. My interest in that was sparked. I think Tyler Cowen, who's an American economist, did a big old interview with the chairman of Moderna, and he asked him what was the next big thing coming down. That this is the chairman of Moderna or the founder, and he just said, "Watch out for plant biotech." He said that's really interesting because we could really begin to make plants do more stuff that we want them to. And that got my interest up. And most people who hear plant biotech, they probably end up thinking, I think mistakenly, about things like, GMO and all that kind of stuff. But that isn't what's coming down the track, is it? Because effectively, we're talking about using the existing, using CRISPR, using the existing DNA structure of plants to do different things. What's the most interesting bit in plant biotech for you guys at the moment?
Oh, there's so much going on in this space. One of the companies I just looked at that I thought was really fascinating to me, and this isn't, in our portfolio yet, but it's a technology for a plant that when the plant suffers disease or it's attacked by a pest or it needs water, the leaves change color to let the farmer know what is needed there. So that shows you kind of the how crazy the world of plant biotech can get. We're really focused on a lot of more core types of things that improve the farmer's profitability and improve the functioning of the plant in the field. So for example, we made an investment in Benson Hill Biosystems, which grows a high protein soy. And farmers can sell it at a higher price, so it improves farmer profitability, but it also reduces the water usage and the processing to get to a high protein soy product for the Beyond Burgers or the Impossibles or for fish food or for any type of other product that needs a high protein soy associated with it. So you can go and you can breed plants using natural breeding where you're taking like large data systems and the ability to analyze different genetic components of different breeds of a plant and use natural breeding to get to the same place that you could have gotten to with GMO 10 years ago too. Yeah. And then you can use those characteristics to enhance the sustainability, improve the farmer profitability, and improve the yield of the plant in ways that you couldn't do before. And that's really driven by where we started talking here. It's the ability to sequence the genes more cheaply and to analyze the data more cheaply. And as that technology continues to reduce in cost, you're going to see more of these plant biotech companies proliferate with different types of solutions that are as broad as your imagination is, quite honestly.
Sorry, I was just going to say that, but and that's definitely not the Frankenfood scenario. This is effectively taking old plant breeding technology and ideas and just supercharging it at light speed, because you've got CRISPR that could effectively zero in at a genetic level. So it's really in process terms, it's no different than what we've been doing with plant breeding, but it's just accelerated at exponential light speed. Is that right?
So that acceleration is basically breeding in the cloud. So
right.
Breeding in the
cloud. Great term.
It's actually, so seriously, breeding in the cloud versus breeding in the soil. You eventually, obviously, have to breed in the soil, but the ability to run those simulations on your computer in silica. Right. So Benson Hill says, we're breeding in silica, and then eventually we'll breed in the soil. So the ability to run all those permutations, all those. Analyze all that data, run all those in the cloud over various cycles, and then finally get to combinations you think are really going to be impactful, which could have taken you decades, multiple decades perhaps in the past, now takes you hours, days, weeks, whatever. And that's a massive improvement in where the world is. And just imagine expanding that technology across the world and across all different types of plants. The amount of progress we can make, we think is dramatic.
I just want to talk about last couple of questions. One, I want to talk about emergent technologies, and I just want to focus on two things really. There's a lot of coverage about vertical farming, and there's also been a lot more coverage around carbon markets and putting carbon back in the soil. What's your take on both of those emergent markets out there? Do you think they'll make it to the mainstream? Well, vertical farming is almost at the mainstream. I think it's a great idea, but I always worry about the economics of it. What's your sense of those two markets?
So we'll start with vertical farming. We believe that it's a very good technology, and that there are certain types of plants and there are certain types of geographies and situations relative to cities where they make a lot of sense for certain products here. From an investment standpoint, in the United States, we've stayed away from it because the legalized cannabis has driven up the valuations of companies in ways that really didn't make it right for us from a venture perspective to invest there. So we don't have a very large portfolio in that area. On the carbon credit side, we believe that to have real value as carbon credits, at some point, agriculture needs to be able to prove that the carbon exists and persists in the soil too. And so we don't believe that technology has been developed yet. And so where we've been investing in that space is on the proving technology, the ability to analyze soil, to look at it both in a specific period of time and over time, and show that the carbon is actually sequestered and persists in the soil. But we're looking for those solutions, those types of technologies, in conjunction with other soil analytics that they can do at the same time, so that we're not entirely dependent on the carbon credit market developing. But we believe that soil is an excellent opportunity to store carbon, that changing farming practices is an excellent way to offset greenhouse gas emissions, but you have to be able to prove it, and we can't prove it just yet.
Sorry, you go, Mark.
That would be the MRV, some of the MRV, measure, record, verify. If you can provide all that, then you start to establish the basis for a carbon credit market for the soil.
And presumably, just two quick follow-ons on that is, at the moment, if I were to say I'm sequestering 8 tons in my pasture field or whatever it is, you're suggesting at the moment that to be able to definitively prove that the technology is not really there, probably at scale.
That's correct. They're being developed. There are multiple people working on these solutions, and everyone sees the opportunity there, but it just hasn't been commercialized yet.
And what about regenerative farming? Because that's sort of coming at the same problem, isn't it? It's trying to say, well, okay, we maybe can't measure it, but we can build a more sustainable regenerative farming system on it. Again, an idea that is actually very appealing, but I often wonder about the scaling up opportunity there. What's your sense of regenerative farming?
So we are big fans of regenerative farming. We think we need more regenerative farming in the world, but it's a difficult thing for a farmer to switch from their current practices to regenerative, particularly in the United States, because we have a ag lending system that's tied to commodity production, and that you have an input market that's really that's really kind of strapped farmers into that segment of the market here. And so you need to be able to provide a finance backbone to enable them to make the switch. So that's where we've been investing. We have a couple of investments in that area, one of which is technology that helps, a software package that helps small farmers find grants for switching over to regenerative farming. So they're providing the financial basis for doing it. And another is a more sophisticated company that's really taking the risk associated with new farming practices and securitizing that into financial instruments, and then allowing people to invest in that instrument so that the farmers aren't entirely taking the risk of switching over from technologies here. But until you can give the farmers a way to do it, I think a lot of farmers would like to make that move. They're tired of being tied to the Syngentas of the world. Yeah. And they want to have less dependence there, less dependence on the input markets, on the seed. I mean, when I grew up on our farm and you went to our seed barn, it was like the colors of the rainbow. Like there were so many different seeds in there. And now if you go to a seed barn, it's one bag of seeds, and that's all you see. It's the same bag of seeds over and over again. We've just lost that diversity. And to be able to a lot of farmers want to go back to that. They understand that it's better for their profitability, it's better for their soil, it's better for their operations to be able to do that. But they're stuck in a financial system that makes it hard to make that switch. So we have been trying to make investments in financial products that help make that switch an easier thing for them to do.
I just want to finish with the last minute or so. Just talk about the state of the venture capital market generally. I mean, a lot of not just talking ag tech here, just talking the tech market generally in VC land. The red marker pen is being pulled out, so lots of valuations at the moment. Particularly late stage tech companies are getting massive haircuts. What's happening in the ag tech market? Is it quite as dramatic, or is it slightly mitigated by the fact that it's much more of a nascent sector? It's probably there's not a lot of opportunities, and there's probably a weight of capital chasing it. What's going on in the ag tech? Are you seeing big red marker pens being slashed through everything?
So I'm going to speak to our portfolio. I'm not going to speak to the broader market here. Every quarter, this quarter, we've sent out quarterly statements where our valuations were up. We've had multiple up rounds in our portfolio over the past 6 to 9 months. After all of the market turmoil started and the war in Ukraine started, our companies did better in a lot of respects. I don't know if they did better, but they didn't get hurt by this, because one of the things that happened is that all of those global events really highlighted the need for these technologies too. And it highlighted the fact that they were becoming commercially viable at a more rapid rate than people had predicted, I believe, too. So we've seen up rounds in our portfolio. We've had substantially more up rounds than we've had down rounds. We don't know if that's going to persist. I mean, when global markets go bad and there's broad market issues, it hits everybody at some point. So I'm not sitting here saying that we're not going to suffer from that. But our experience this year was very different from the broader venture capital marketplace.
Yeah, I would just add that to your point, David, because this is not an overly saturated market, and because there's only about 3 or 4% of total VC dollars going to this area right now, I believe, at the current time, that you've got particular players that understand it. There are more players coming in. There are more generalist, larger VCs that are starting to come in as well too. We're seeing all kinds of other technologies and other areas come into the agricultural sector, which is a great thing. I don't think we had the froth, as much froth as there was elsewhere. There has certainly been, there's been supply chain issues with some of the companies that has resulted in some valuations that have been challenging, et cetera. But really, that was a function of global events, not necessarily operational aspects. Clearly, there'll be companies that fail, and clearly there'll be down rounds, et cetera. But overall, I think we think it's an underinvested area. It's a massive market, and to Mike's point, at least from our perspective, our portfolio is doing well.
Okay, Michael, Mark, both of you, fascinating. Thank you very much. So do check out their website, iSelect, out in the Midwest of America. What's the weather like there, by the way, guys? Is it freezing cold or is it nice and warm?
It just got cold today, so we pulled our winter coats out for the first time this morning to walk the dog. And,
excellent. Winter is on its way. Anyway, thank you very much, Mark. Thank you, Michael.
Thank you.
Thank you, David.